Hey guys, welcome back to Zach Going Fire. Today we're going to talk about what to do when the market is at all-time highs. In fact, we're going to talk about what to do whether or not the market is at all-time highs or whether it's crashing and burning. If you're new to this channel, I am a truck driver who plans to retire next year at 44, and I was bankrupt and broke about 10 years ago. And this channel is talking about my journey to FIRE, being financially independent, retiring early, and we'll talk about everything involving money, finances, how to invest and save. And I want you to come along with me and join me on this journey. So as you can see, the screen behind me, I've got up on Yahoo Finance VTI, which is Vanguard's Total Stock Market Index ETF. And over the last 5 years, it's up almost 100%, meaning it's doubled in value over the last 5 years. It's currently at all-time highs. That can be a scary time for some people to invest because you think, well, it might drop. It's got a long way down to go from here. But what I will be doing and what I recommend most people do is to continue to buy. Now, what you buy matters. Whether you're buying stocks or bonds matter. But especially if you're in the accumulation phase of investing rather than decumulation in retirement, if you're still accumulating your assets, then you should always be buying something. So the way I do my investing with the 3% signal is money going in is always going in to the bond fund of our portfolio. And I think about that as just the best way to manage emotions along the way. I'm going to walk you through some tabs here that I've got pulled up and talk about managing your emotions and why it's good to continue to buy. So before I found Jason Kelly and his 3% signal strategy, I used to be a financial advisor, and I looked at all different kinds of strategies on how to invest. And I still have habits built in where I will go to CNBC, and there's always stories to read about what's going on, what people think you should buy or sell. I would go to Yahoo Finance and read the stories there, what's going on in the market, read about what the Fed is going to do. I would go to CNN Business and look at their fear and greed index. And all of these things talk about ways you can time the market and different things that are good to buy or sell. And along the way, you really just learn that none of these are good timing indicators. In fact, there's really not any one good timing indicator. The only good indicator is price. And with the 3% signal, you only have to look at that once every 3 months. So between signals, you don't have to look at anything. You should have your plan set up automatically to be investing in bonds, whether that is in your 401k or your IRA or just a regular brokerage account. You have the money from your paycheck automatically being sent over to the account, and you have the buys automatically going in, whether you're paid weekly or bi-weekly or monthly. You don't have to worry about the news and what other investors are saying and doing. You don't have to worry about whether the market is at all-time highs or not. And sometimes that can get very scary, and it can get very boring. So I do recommend, if you need to have something to turn to every week, rather than turning to all of the articles on CNBC or Yahoo Finance, I would recommend Jason Kelly's letter. The Kelly letter here on his website is at $105 a month, or you can do the annual plan for $1,050 a year. And that is really a great value. He sends out a weekly letter and he distills all of the pertinent financial news from the week. And you don't have to read it. If you wanted to subscribe, one of the best things to know about this service is that you don't have to read the letters at all. The letters are just there for people like me that likes to know what's going on without having to worry about it. I don't need to worry about what action to take because I know that between the monthly signals, the quarterly signals, I should say, there's no action to take. So I just continue to have the automatic purchases of the bonds going on, and at the end of the quarter, that's when I'll take action, and I will either buy stocks if they are down below the signal, or sell stocks and buy bonds if the signal is above the purchase target that we want. So I have some friends who also invest in XRP and other cryptocurrencies, and you can always go on YouTube and Reddit and find there's thousands of videos talking about why you should buy this and how it's going to continue to go up. I've pulled up here on Seeking Alpha the 1 year chart for how XRP has gone up versus the S&P 500 and bonds, just to kind of show you X&P over the last year to date. It is up 27% versus only 13% for the S&P 500 and only a 6% return for bonds. And if I had to choose, I would say XRP will probably go up next year. But I don't have to choose that. I can continue to use the strategy using stocks and bonds and continue to get a steady return, or at least more steady than trying to invest in something like XRP or cryptocurrency. And you can see based on this chart here how much XRP is the orange line, how much more volatile it is versus stocks. And stocks by themselves are a lot more volatile versus bonds, which is the purple line here. So for me, because it's been going on for more than 100 years with stocks and bonds versus XRP, which has just been going on for a few years, and cryptocurrency in general has only been going on since 2009. So the extra reward that you could get for investing in something like that doesn't match the risk for me, because if you put in, let's say if you had $1 million to invest and you put in $10,000 and it went up by 10 times, that would only give you $100,000 more, which is only a 10% addition to your net worth. And so that wouldn't be worth the risk of losing the $10,000 for me. I like to know that when something goes down, that it's a good buying opportunity. And that's how I always look at stocks or bonds, is that when they're down, it's a good buying opportunity. So that's it for today. That was a short, quick video about how and why you should continue to buy in the stock market when the stocks are at all-time highs like they are now. More than likely, next year, it will be at another all-time high. That's just how things have worked in the past. So, am I buying now? Absolutely. I'm buying bonds. Every time I get a paycheck, I'm buying bonds. Now, that's in the accumulation phase. Things will change once I get into the income phase and withdrawal phase. I'll start selling, but I still won't worry about where the market is on a week-to-week or month-to-month basis. I'll do the selling based on the signal at the end of the quarter. So if you have any questions about our strategies, please let me know down in the comments. I'll leave a link to Jason Kelly's website down in the description below. And until next time, let's continue to drive towards financial freedom.